What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be taking a look at Alibaba as it made over a 4.5% move up here today on the back of some news related to Ant Group and what they plan on doing with their ownership in the company. Then we're going to take a look at some reasons why Alibaba is set to go much higher than its current price and could potentially triple up over the next 3 years. Finally, we will leave off the video by taking a look at valuation and EPS as earnings are coming up here at the end of August. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So as I mentioned in the intro, Alibaba is up over 4.5% in a single trading day. At the start of the day, it was trading at around $91 and spiked all the way up to $97. However, it traded down a little bit from there to leveling off around $96. If we look over the last 5 days, we could see that the stock is up over 5.3%. And if we look at the last month, we can see that it's up over 12%. The last 6 months, however, the stock is down around 20%. And a lot of that has to do with the start of the year. We saw a large run up from Alibaba where it ran all the way up to around $120. However, it traded down from there, then ran up again, traded down, ran up. And then from its lows this year at the end of May, early June, it's actually traded up a fair amount, around 22%. Alibaba over the last 5 years is down almost 50%. And from its highs back in 2020, we can see that the stock is down almost 70%. From its highs in 2020, we've got a lot of drama that has gone on with the company as well as with relationships between the US and China. We had delisting concerns, we've had numerous lockdowns in China that have all really resulted in Alibaba falling in a massive way. What we saw today with the large move up from Alibaba was on the back of news that Alibaba announced they would not be selling any shares of their position in Ant Group. Ant Group announced that they would be buying back around 7.5% of their outstanding shares, and Alibaba plans to maintain all of their 33% ownership in the company. One of the reasons this announcement is so important is because a couple months back, Alibaba announced that they were going to be splitting their business into 6 different units. And the fears that investors had when this announcement came out is that Alibaba would lose a lot of ownership in these 6 different business units. However, what we are seeing now with Ant Group and them maintaining 33% ownership in the company really shows that Alibaba still plans to maintain a large amount of ownership across all these different business units. And this is huge when you think about the amount of growth that these companies will undergo over the next decade. When we look at Alibaba and its domestic market, it consists of over 1.4 billion people. That is 4 times the population of the US and 40 times the population of Canada. On top of that, the Chinese economy grew by 6.3% year over year in the second quarter, but just 0.8% from the first quarter. This is causing economists to really look at the Chinese economy and call for more aggressive stimulus. China did not go as aggressive as a lot of countries in the rest of the world. They did not lower their interest rates as quickly as other companies like the US, and they really didn't pump money out into their economy. They took a very different approach and really let things kind of figure themselves out. So they have a little bit more room for stimulus because they don't have as big of an inflation issue as the rest of the world. As I mentioned, China has a massive marketplace currently. 400 million middle-class consumers in China. That is the world's largest e-commerce market. They also have been improving their infrastructure in terms of low-cost internet access and smartphone ownership. That is something that people forget, that China is not extremely technologically advanced. They are still growing and getting more people access to the internet and more people access to smartphones. And it is projected that 1.2 billion people will have low-cost internet or a smartphone by 2027. And currently, Alibaba controls more than 50% of online shopping in China. So they will continue to capitalize by this technological advancement. On top of that, Alibaba has capitalized a lot on international markets. They have AliExpress as well as Lazada, which is one of the business units they plan on splitting off. And these units experienced around 40% growth in international sales. In this article, they talk about the spinning off of Alibaba's cloud business as being a positive thing. They say that it makes up less than 10% of the business, and it is nowhere near as profitable as Amazon's AWS, and it is often turning a quarterly loss. In my opinion, I actually think the cloud business is a huge growth vector for Alibaba. I think if they were able to keep this, or at least keep a large share in this spin-off company, that is going to help be a large large catalyst for the business moving forward for the exact reasons we just talked about. As more of the population gets exposure to the internet as well as smartphones, cloud is going to become more and more important in China. I love looking at valuation, and Alibaba has an extremely low valuation. We have seen their earnings decline over the last year or so. That has resulted in the stock price moving lower partially. However, it has moved far lower, far quicker than its earnings have moved lower. And that is important to keep in mind, especially as we potentially see China come in and stimulate their economy. If we start seeing them put out a bunch of cash into their economy, this could help grow the company in a massive way. And even if they keep a relatively low valuation, if they start turning around their earnings and increasing their earnings, we should see the stock price follow suit and move up. And when we look at their valuation right now, they're sitting around an 11 forward P ratio, and they often get compared to Amazon, which is sitting around a 75 forward P ratio. In my opinion, I'd rather just compare it to the broader market, because in my opinion, Alibaba has a lot more growth ahead of it than the broader market. And right now the market's trading anywhere from a 20 to 25. So it is trading at a deep discount compared to the overall market. Right now, analysts have a price target of around $143, which is more than a 50% return over the next 12 months. And if we see that occur each year for the next 3 years, we would see Alibaba hit new all-time highs and triple up in its stock price. And personally, I don't think this is out of the realm of possibility. If we look at Alibaba's earnings on Yahoo Finance, analysts are currently projecting for 2025, which this is actually next year for Alibaba. Their fiscal year runs differently than a lot of companies within the US. They have a high estimate of $13.37 projected in EPS. If we take that number and multiply it by a PE ratio of 25, that would mean that Alibaba would have to trade at $334.25. Obviously, a lot of things would have to go right for Alibaba to trade all the way up to $334. However, one of the things that is built into the stock price right now is limited downside. When we look at their PE ratio right now, again, it is sitting at a 10.46. That is extremely low for any company in the stock market. Even their trailing PE ratio right now has gone all the way down to 24.31 as they start to bring back a lot of their earnings and potentially start growing their earnings in a major way over the next couple of years. So am I buying Alibaba currently? No, I have built out a position that I am very comfortable with and I like for the long term. I think that there is a lot of upside potential with Alibaba and very, very limited downside. We've started to see them over the last year really turn a corner. We've seen delisting concerns go away. We're starting to see them stimulate their economy. They've also began to reopen their economy. A lot of very positive things that I like going forward. And I think we're just starting to see this run from Alibaba. And I think they could easily get back into the 200s, if not even back all the way up to $300 over the next 3 to 5 years. But with all of that said, do not buy a company just because some random person on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.